All right, hello, everyone. Happy Monday. Welcome to Weekly Market Check-in here with myself, Greta Wall. I'm your host, and I'm joined by Derrick Oldensmith. Derrick is a professional trader with T3 Trading Group, the lead trader there, and the leader of T3 Live's Pro Desk virtual trading floor. Real quickly, here's a look at what Derrick is currently trading in this market as of 12:30 p.m. Eastern Time today. The title of our stream today is MAG7 earnings week, and it is a big week for the MAG7, the mega cap tech stocks in the market. Derrick, happy Monday. How is your day going so far?
It's going. I'm just catching my breath. Like I was just saying to you, I was running a minute late because I had to go in my backyard here in Idaho. My neighbor's cows sometimes get in it because there's, the fence could use a little bit of work after the winter. And there was two back there. I was just like, all right, no big deal. I don't even need to call them at this point. I know how to handle these cows. So I went out there to chase him back into his yard. When I got out there, I realized one was a bull. And the bull was tough. The bull was not running away like the cows usually do. I had to really go after him, but eventually I got them out. So
is it a bullish sign?
That's the question, isn't it? That's what everyone seems to know. I mean, we might, looking at the technicals here on my other screen, we might be near a little bit of a bounce spot for the market. We'll see. It's been a little bit of a weak Monday, but we'll see.
All right, yeah, a weak Monday, but we'll have to. I'll make sure to tell Mike about your bull experience. He can check in with you on Wednesday during the group stream if it was a bullish signal or not for your trading for the next
for sure.
All right, it is MAG7 earnings week. Like I mentioned, we're going to get reports from Meta, Microsoft Wednesday, and then Apple, Amazon Thursday, plus a bunch of other reports around there. I think Palantir is Thursday also, right? Maybe. I don't remember exactly what day. Reddit's Thursday. Like there's just a lot happening in earnings this week. So kind of give me your overview on the market heading into this week. We're also in the backdrop, of course, of trade negotiations ongoing with China, so they say. So what's your read on the market right now?
So I see Palantir on the 5th is what I'm seeing right now.
Okay, next week.
Probably should be fact checked, but that would be next Monday. Yeah, so I mean, look, a lot of moving parts this week. We got some important economic numbers that are going to be coming out. I think with the jobs number for April, it's coming out on Friday. It might be the first glimmer of a number where we see a little bit of an impact from the tariff situation, though I think it's going to be still a little bit further out when that begins to hit the economic numbers. At the same time, as we have a lot going on with the macro, we got a lot going on in the micro. Big companies reporting. We've had Netflix and Tesla so far as and Google as little teasers for these MAG7 companies, and now we're going to get the rest of the big boys, Apple, Amazon, Meta, all set to report. So I think Microsoft also. So it should be an exciting week. There's a lot going on. The market is given an incredible bounce back from where it was exactly a week ago when you and I were talking. When you and I were talking on Monday a week ago, the market was down, and that ended up being the only negative session for the week. We had an absolute ripper of a week, Tuesday through Friday, just up and up and up. This has been a piece of the positioning squeeze that I've been calling for and looking for from the market. Just 4 really big days in a row. One point we're positive again this morning, that we're really starting to extend. 550 continues to be the huge SPY level that I'm talking about. But maybe, do you want me to just share the screen real quick to kind of give a market overview?
Yeah, definitely.
Okay, cool. So here's the SPY. So this is what I'm talking about. We last spoke Monday a week ago. That was on April 21st. We put in a low that day of SPY 508.50. Now, 1 week later, this morning, we were trading at 553.50. That is an insane move. And it's actually dwarfed a little bit by the real insanity that we had earlier in April that happened after the reciprocal tariffs, where we broke down through 550 support all the way to a low of 481.50, back up to 550 on the pause, back down to 510 or below it when you and I last spoke, and now this 550. See how many times I just said 550? That is the level. That is the key level for this market. It was support pre-reciprocal tariff announcement. It has been resistance post reciprocal tariff announcement. And that's the big question is, can we get above and hold above 550? We got above it a little bit on Friday into the close. We were above it a little bit this morning. But what I was telling the team this morning was that we're just too extended. While I do think if the market can hold above this 550, you could see another leg up of a positioning squeeze that could take you to as high as 570 or even the 200-day, which is at 573. For today's trading session, it's a day 5 to the upside with at highs like $13, $14 of extension off the 80 MA on the daily. Even if this market wants to move higher, it probably needed to pause. It needed some degree of price and time correction. So for today, I was looking for some shorter term shorts. We had a fantastic call out basically off the high of the day for a pullback. It worked great. And now we'll see if that's it or not. There should be some underlying demand to this market. So what I keep trying to wrap my head around is time frames right now, because the smaller time frame of the daily chart seems decently bullish to me. And I've been talking for over a week about just the positioning in the market. The positioning risk is to the upside. And that is what fueled this move higher last week, which seemed more like a short squeeze, positioning squeeze more than anything else. I know that there was a little bit of a sigh of relief, just maybe this tariff situation isn't going to be quite as bad as everybody expects. So that helped as well. And that has the capacity to continue. We know that the systematics are buyers right now. The CTAs have become buyers as of last week. They probably bought a little bit over $1 billion of SPX per day every week last week. And if realized vol can come down a little bit, we will probably start to see the vol control funds really pick up some buying starting next week. We've got the buyback blackout window per Goldman Sachs kind of ending on Friday. And then once we get through the really big earnings reports that we have this week, then those companies starting a couple days after, they'll be able to start buying back their stock as well. So the thing about stock buybacks or about systematic buying that comes into the market is it's not really discretionary in nature. It doesn't really necessarily know or care that there are tariffs or who the president is or any of the stuff that everybody seems to be talking about right now. They're just going to do what they do based on their rules. And that means that in this current market, they're buyers. So they're pushing this market up. So in my head, again, timeframes, I'm on the one hand, I'm like, all right, the positioning risk is to the upside. There's a bullish undertone and a bullish bid to this market that's underneath things. But there's a lot of data, a lot of research that I've been looking at besides just utilizing common sense that makes you believe that as this tariff situation hits a little bit more bigger picture, you're going to see potentially an increase in inflation numbers, but even more probable than that is going to be a little bit of a slowdown in growth and potentially an uptick in unemployment. So it's like on the smaller and maybe intermediate picture here, I can look to be a little bit more bullish based on positioning, but the more up we go, the more it gives way to that bigger picture underlying bearishness that just comes from the fundamentals of the market. So the way that I've been playing this is I have been a buyer on the way down, and I have been a seller and a short seller on the way up. So I remember a week ago Monday when we spoke, at that point, because I had some shorts on coming into that day, but by the time that you and I were speaking, I think I was 100% long. And without a doubt at lows, that 510 low, 508.50 low, I was 100% long. But as this market has creeped up over the course of last week, and it was a really big move, I think we had 2% NASDAQ up days in a row, which is like a record, or up there in top 10, whatever. As we've been creeping higher, my game plan has just been book profit on those longs, slowly, steadily, incrementally, and then at a certain point, re-engage those shorts and size up in those shorts slowly and incrementally. So that way I can kind of realize both sides of the thought process at the same time. I'm recognizing the shorter term headline and positioning risk is to the upside. So I am being long into those pullbacks and slowly selling on the way up, booking some profit, but also realizing at a certain point, this market probably gives way to the macro. Now, does that happen at SPY 550, this huge level? Do we have a squeeze up to the 200-day at 573? I think we could. But basically, the more we move higher, the more I'm going to be building into those shorts, the less longs that I'm going to have. So As we get to this 550 area, I get more market neutral. If we get closer to the 200-day, I'm just going to be coming gradually more and more net short on the way up.
All right, when it comes to the earnings reports this week, again, it's Meta, Microsoft Wednesday, Apple, Amazon Thursday, all after the close, of course, as usual with those big cap tech stocks. Of course, so much of movement on a stock after the print is based on where the stock is into the print. Can we look through those names and the charts of those names and kind of the setup that we're looking at pre-earnings for them?
Sure, absolutely. So
and we're still, a few days away for each of them. So these things, of course, could change.
The picture can rapidly change. Absolutely.
Mm-hmm.
So all these names are still in pretty hefty pullbacks from their absolute highs, but have also now bounced back a little bit as well. So it's not like that bare bones destruction where, what I was saying on Tesla, which proved to be right, and maybe we can take this exact same concept and apply it to some of these other stocks, was, look, I'm not a bull on Tesla. I don't think that anyone is surprised to hear me say that. I'm not a bull on Tesla, but I really felt that the sentiment risk on Tesla at that point was to the upside. This stock was just so beaten up going into that earnings report that I didn't think that they needed to report anything great in order for the stock to move higher, at least in the short term. And then at some point that'll probably give way again to the fundamentals. And guess what? Tesla's numbers were atrocious. They were atrocious compared to estimates, though I don't really think that the analyst estimates were fair because they hadn't been, I don't think, readjusted to some of the data that Tesla had provided a little bit more recently on some of their car numbers, and the whisper numbers were lower than what the estimates were. But regardless, they were abysmal compared to estimates. I don't think they beat on a single number on their earnings report, but stock traded great off of it. The best thing that came from Tesla's earnings report was Elon saying that he is probably going to be taking a half step back from Doge in the relatively near future. And that was enough in combination with the market to move higher to create a pretty strong positioning squeeze. And it was just on Friday that I was actually calling for a Tesla long versus 260, which was a great day trade or day and a half trade for anybody who got involved in it. So the point is, when these stocks are really beaten up into a report, sometimes they can miss on numbers across the board like Tesla did and actually go higher. So the question is, when we look at a Meta, when we look at an Amazon, when we look at Apple, when we look at Microsoft, they are off their lows. They're also well off their highs. Is there enough juice left in these names to be able to push these stocks higher, even if the numbers are, let's say, in line? And I want to think that the answer is yes, that generally speaking on inline numbers, these stocks can move higher. I also think that what we will see, and we just saw it with Google, is that if the numbers are just okay, expect some buyback announcements, expect some support to come from the company itself to help hold the stock up in this period of uncertainty. That doesn't surprise me at all. And then you got some really important levels that we can pay attention to where post earnings report, we can see if they're trading above or below them. I think for Microsoft, which I have up right now, 395 is a huge level. Let's see, are we above 395 or below 395 after Microsoft reports? Apple, 210, pretty close to where it traded today, is a huge level. We're going to be above it, or we're going to be below it after the earnings report comes out. Amazon, 190, really important level that we need to pay attention to. And finally, Meta, a little bit further away. I think Meta really needs to get back above 580 in order to start looking a lot healthier again. So know your key levels as we go into the prints. See what guidance looks like, if these companies are providing guidance, withdrawing guidance. See if there's any buyback announcements like Google did to help cushion the blow of, Google was a very mediocre report. It was a very mediocre report. A lot of people were concerned on the growth of their ad business with search, and that's actually what beat. And cloud missed, which is not good. And YouTube was like in line, a very, very small miss, which is also becoming a super, super important company. Super important company for Google, because obviously they're the owner of it. But then they helped pad it with a nice buyback along with it. So I don't know if Google deserved to trade up to 165 without the buyback announcement initially. And we've seen it fade a little bit. And it's interesting that it faded on Friday when the rest of the market itself was so incredibly strong. But so just a little bit of preview based on what we've seen with Tesla and Google and what these other names might look like, and the key levels that everyone should be paying attention to.
Good stuff, Derek. All of these reports, of course, come on the backdrop of tariffs and what the heck is happening between China and the U.S. Treasury Secretary this morning say it's on China to de-escalate trade tensions. China saying the two presidents have not spoken. There's been no formal negotiations between them. Maybe some talks at lower levels, but not between the presidents. These companies, Apple especially, definitely would be impacted by tariffs in China. Amazon impacted by tariffs in China. Microsoft a little less. Does Meta feel like the one that's the outlier of the MAG7 that's just really not that impacted by the tariff picture?
It's impacted by the tariff picture in a different way. Meta's in the advertising business, and the advertising business is usually one of the first to get hit in a slowing economy. So if the knockoff effect of these tariffs is a recession, then you're going to really see these ad-supported companies, Meta, Reddit, Snap, The Trade Desk, really suffer. So I think that is a lot of the reason why, if you remember with Meta, and I just pulled that chart back up, Meta on the last earnings season probably reported the best out of any MAG7 company that was out there. And then it went on this run. It was a record-breaking run for Meta of, I don't remember, and I don't feel like counting it, but like 20 green days in a row or something silly. And I remember actually the team and I caught the top of that move and caught a pretty big short there. I think I caught the short from 740 down to like 650 or so, almost like $100 worth of a down move on that. And I was like, yeah, I'm awesome. And then of course the stock, continued to crater like another $200 after where I got out of it. But Meta's a really interesting one because again, best earnings report out of any of the MAG7 companies, went on this insane run, and up until pretty recently has not been able to catch a bid for anything. And I think that's just the read-through on a slowing economy means that advertising spend is one of the first things that gets hit. So that's exactly what's going on here. So yes, on the surface of things, a lot of software companies I think are a decent place to hide. I've mentioned in the past, I like cybersecurity stocks right now, like the CrowdStrikes of the world. CrowdStrike's been trading great, or ZS, or I have a position in S, which is also a cyber name, but hasn't been trading quite as good. Their last earnings report wasn't fantastic. But these are software companies. They're not going to be as impacted immediately by tariffs. But I also think that the nature of their business being cybersecurity means that unlike a Meta, which advertising spend is one of the first things that drops down in a recession, these days people are not rushing to get rid of their cybersecurity. It is a necessary part of the business for any company that stores any data on anyone. Because if you get a data breach, data leak, I mean, we've seen it happen so many times now. It's so bad for the company that happens to. It leads to lawsuits. It leads to going to court. Potentially, I'm sure if Meta had like a really big leak, you'd see Zuckerberg in front of Congress again. They don't want to deal with that. So they're not cutting their spend on cybersecurity. And at the same time, they're not going to be impacted by tariffs because they're not involved in the import-export business.
All right, you mentioned the economy and whether it's going to slow or not on tariffs. You mentioned it earlier. We will get the April jobs report at the end of this week on Friday. This jobs report, I think, definitely really in focus for the market because, as you mentioned earlier, it might be the first where we're getting seeing some impacts of the government layoffs and things like that when it comes to the jobs numbers. We're in very much a good news is like extra good news for the market, like those good headlines, everything rips. Bad news is bad news, but not as impactful as good news. The jobs report feels kind of like this catch-22 to me because maybe if we get a really weak jobs report, that's good news because it gives the Fed room to cut. And we, of course, have heard the president calling for the Fed to cut, but the Fed saying they have to wait and see for some more impacts on the labor market and kind of the impact of these tariffs. So what are you feeling about Friday's jobs report? Is a good number good? Is a bad number better?
I generally think that we're still at a period here where good news is good news. One of the things that came to me last week that I mentioned to the team, so exactly what you just described is 100% true. We're in an environment where good news is good news, and the upside reactions right now in the marketplace to good news are significantly more than the downside reactions to bad news. And that's just a function of the fact that we've already entered a bear market. We're down 10 to 20%, depending on which index that you're looking at. I think it's really important for traders out there to pay attention to that changing. I'm not saying that's going to happen today, but I think at some point you're going to start to see good news not giving as big of a reaction to the upside as it had previously. And then that becomes, I think, a big signal that you're getting closer to what I was describing earlier of we're in this environment right now where short-term things look really bullish to me from a positioning perspective, from a headline perspective. Bigger picture things do not look bullish to me because of the read-through on potential recessions related to tariffs and things of that nature. So at some point, this should flip, whether that's and it's probably a combination of price and time. The higher the market goes, the more good headlines will not be met with as large of reactions to the upside. But I also think it's a function of time. The more time that goes by, where we're getting closer to the 90-day pause window expiring, or the more time that goes by where we don't actually get any deals done, we keep seeing that deals are very close, very close. I assume it's inevitable that we see a deal come out of India or maybe Switzerland, one of these countries relatively soon. But as time goes by, getting one-off deals done doesn't necessarily become as important anymore, and eventually is not going to be met with the same degree of upside reaction. That, I think, actually becomes a big signal that it's time to really look in the other direction again.
We've talked about the bond market a lot over the past 3 weeks, way more than you and I have ever talked about the bond market before. Let's get an update on how you feel like things are behaving in the bond market. 2 weeks ago, it was broken. Last week, it was a little better. How's it looking this week?
It's improving. I mean, last week when we spoke was still a little bit of a problem, but now it's significantly improving. You can see that this TLT chart that I just pulled up just to represent the Treasury market real quick is actually recapturing a really important $89 level this morning. It's picking up a little bit. So that's great. I mean, we were in a spot where it was dire straits there for a moment over the course of these last couple of weeks, where it seemed like everything was being sold, stocks, the dollar, and bonds all at the same time. That's very unusual. And this is another thing that, this story here is constantly changing on, is TLT moving higher, which means interest rates go down. Is that a good thing? Is it a bad thing? That story always changes, kind of based more on the macro narrative. And it really same thing with the dollar. And most of the time, actually, the dollar going lower is good for stocks. It makes the stock market move up. But more recently, we've actually been in an environment where it's been the opposite. People are breathing a sigh of relief when the dollar is moving higher because they're like, oh, maybe it's not the end of U.S. exceptionalism. And with bonds, it's the same thing. Seeing TLT back above 89 is it's really good. It's exactly what you want to see. Maybe there's a chance that we get through this, but we have to continue to monitor the situation.
All right, you and I have talked about the earnings reports coming up this week and the levels that you are looking at as a trader, but what other ideas are some of your favorites for the week?
Sure. So I kind of covered it, I think, already, because the way that I trade almost always is big picture down to small picture. I start with the big picture of the indexes to make my decisions before I look at any individual stocks. I want to look at the SPY, I want to look at the Qs, I want to look at the Russell, and I want to say to myself, all right, what is the probability of up, down, sideways? And I ask myself that over different time frames. Maybe intraday today, I think that there's a higher probability of us going down, but bigger picture on the daily chart, I think that there's a higher probability of going up, let's just say. So I always start with the index itself before I break it down into any individual stocks. And especially right now, with so much important macro that's going on, the index level analysis is more important than anything. So for me, at SPY 550, where we were this morning, which is just that huge level, that's an area where right now I don't actually want to do too much. I don't really want to do too much. I don't want to do too much new, I think is really what I'm trying to say. If we get closer to that, 560 to 573, that's where I'm going to really look to kind of pile into those shorts significantly heavier. If we break down to that 510 area, that's where I'm looking to be a lot longer. So for me, it's just been, I've got this portfolio right now of 27 positions on right now as we're having this conversation. I think 4 of them are short, so that makes 23 of them long. And I am heavier in those shorts than I am in my longs right now. So don't let the amount of stocks fool you. I'm a little bit more neutral than just the amount of positions I have long versus short might indicate. But it's just about, all right, these are the companies I want to be involved in, and I'm just building in and building out and trying to pull out P&L, and that will enable me to be able to make money in this more uncertain range-bound environment. I can make money long, I can make money short, I could potentially do both at the same time. I really do think that this is a two-way market, but it's a two-way market with really, really, really big moves. So we'll start with that. And then outside of that, for individual stocks, I just really want to get through these earnings. I want to get through the earnings. I don't take big bets into earnings reports. So you're probably not going to see me put on any new positions in Apple, Amazon, Meta, Microsoft before their actual reports. And then I will reassess all of those names after they report to see where they're trading, what the earnings reports look like, and should I get involved long or short.
All right. Good stuff, Derrick. All right, everyone, if you'd like to get Derrick's free ebook, you can go to t3live.com/DOLive. Again, Derrick is the head trader for T3 Trading Group and the leader of the ProDesk virtual trading floor. That's where all the T3 Trading Group traders trade on a daily basis, collaborate with each other, exchange ideas, talk about trades, see what Derrick's doing, his counterpart, Pat. All of them are in there together in the room daily. So again, t3live.com/DOLive to get Derrick's free ebook about the benefits of prop trading. If you prop trade with T3, you'll prop trade with Derrick. You'll work with him directly. All right. So Derrick, have a great rest of your day, your week. You'll get a nice market check-in on Wednesday, pre those earnings reports with Derrick and some of the other brain trusts from T3. So that'll be good. So everyone stay tuned for that. Have a good rest of your week, Derrick. Talk to you next one.
Thanks, Greta. Appreciate it.